Okay, so today we're looking at car insurance, guys. There are three main types of car insurance. The first one is CTP, which is compulsory third party. It is sometimes called the green slip for the simple reason that the piece of paper that it's on is green. Okay, so sometimes it's called your green slip. Does anybody know what the CTP slip's for? It's an insurance. It covers you for something. It's something about if you have an accident. What does it cover you for? It protects not the other car, the other people. Okay? It is compulsory. You cannot have a car and drive it around legally if you don't have a CTP slip, okay, a green slip. It is compulsory that you have it. It will cover injury to other people. So that's what it covers. Okay, so if you're in an accident and you injure a pedestrian or a passenger or anyone on the car, it's compulsory to have this and you will be covered under insurance for that.
Wait, what about people like you or passengers?
Anyone you injure. Okay? Now, third-party property is not compulsory. It is your choice if you want third-party property. What do you think that covers? The other person's car. Definitely covers the other person's car. It also covers anything else you might run into. Like you might run into someone's house. Okay? Whatever else you have caused damage to. Okay, so it's not compulsory. It is your choice. But it covers damage that you cause to other people. Other people's car or property. Okay, so if you damage someone else's car, then you'll have to pay an excess, but you will be covered for that if you have this one. Now the third type is comprehensive insurance. Does anyone have a clue what that would cover? So we've covered injury to other people, we've covered damage to other people's car. Comprehensive covers your car. Okay, so if you have comprehensive insurance and you run into someone else, then you will have cover for the damage to your own car. Okay, so this covers your own car. And you. Okay, so this is any damage that you have to your car, any injuries that you get, medical expenses, that's covered in comprehensive insurance. These are not compulsory. Okay? It's something you need to consider carefully. I know that as young drivers, you don't necessarily have a very big income, and it seems quite a lot to pay premiums, but it's worth looking into covering damage to other than just people. Okay, so if you're going to run into another car and then be liable for the damage to that car and you don't have insurance, you could be in a lot of financial trouble very quickly. Okay, car damage is very, very expensive. Okay, so that's the three types of insurance that we're looking at. And we're going to look at some of the terminology to do with those three types of insurance. Okay, so some of the words that you'll see in regards to insurance. The first one you'll see is premium. What does premium mean? Anyone know what premium means? It's your premium. That's a helpful definition. The premium is what you pay for your insurance policy. Okay? So this is what you pay. Okay, so you are paying a company. You are paying a company for your insurance policy, and that's called your premium. Now, they calculate their premium on a number of factors. What factors do you think will affect? Definitely age. Okay, some factors that affect it. Age. Where you live. Okay, so your address. Where you park your car, yeah? How often you drive, yeah? Okay, we don't need to hear the ads. Okay, obviously advertising's working on you. Can you read that? Anything else? Your gender? I don't think so. Your history, if you've had car accidents before. Okay, so your driving history, or driving record. Okay, so if they know you've had 3 accidents in the last year, then your premiums are going to be rather expensive. Okay, so your driving record. There are lots of things that go into calculating what your premium will be. Even what type of car you drive. Okay, so depending on what type of car you drive, that will also affect your premium. Okay, you've seen all the ads. What do you get discounts for? What do you get discounts on your premium for? You've all watched the ads. What do they give you discounts for? You don't know? Having good things. What good? A good driving record?
Yeah.
A good age.
A good, if you're not young, address.
A good driving record makes a big difference to your premium. You also get a discount if you have more than one policy. So it's called a multi-policy discount. So if you have, remember the different types of insurance? If you have them all with one company, they might give you a multi-policy discount. If you've not had any accidents in the last couple of years, you might get a discount. Okay, if you have a car that's always parked in a garage and you only drive a few kilometres, you might get a discount. So there's lots of things. Any of these good things could actually bring your premium down as a discount. What's an excess?
Like added cost.
When do I pay an excess?
Oh, when you have a crash.
When you have a crash. Okay, so when you have an accident, you will pay an excess. Now, depending on what policy you have, that could be a large amount of money or a small amount of money. And you can choose with some companies to have a bigger excess and a lower premium. Okay, so you might say, I'm willing to have $1,000 excess for a much lower premium. So you're hoping you don't have an accident and you're going to take that lower premium, and you know if you have an accident, then you're going to have $1,000 excess. So the excess is what you pay if you have an accident. So if you have an accident and you do $5,000 worth of damage and you have a $1,000 excess, you have to pay the first $1,000. The company then pays the rest. So it's really important when you are looking at what type of insurance policy you're getting that you check that number out. Okay, that you check out what your excess is. Particularly if you're hiring a car. Let's say you're not buying a car. If you're going to hire a car, check this number. Okay? They can often be up to 10,000 on hire cars. Pretty scary numbers. So the excess is what you pay if you have an accident. Okay, so we need to know those words: premium, discounts and excess when they appear in your questions. Okay? Okay, let's look at a couple of examples. Okay, the first example. Aaron. First example is we have, let's say Bob. Bob is trying to decide if he should pay his payment. Okay, so when you have your premium, so Bob is trying to decide if he should pay his premiums monthly or yearly. So with this particular quote he's been given, he's told that monthly is going to be $58.75. And yearly is going to be $658.50. Okay? And we need to help Bob make this decision. What do I need to know for Bob to make this decision?
How much is he end up paying the whole year if he pays monthly?
Excellent. So I need to know what have I got to pay if I pay monthly. So let's work that out. So how many months in a year? 12. Okay, so we're going to take our monthly, which is $58.75. We're going to multiply that by 12. Someone work that out for me? 705 exactly, is it?
Yeah.
Okay, so Bob would pay $705 if he pays it monthly. How much is he saving if he pays it yearly? So we do 705 minus the 658.50. 46.50. Thank you. Okay, so if you were Bob, what do you think you would do?
Oh, I definitely go yearly.
So you'd go yearly?
Yeah.
Okay, so if I was Bob, I'm like, yeah, $46.50, that seems a bit excessive, I'm going to pay yearly.
Yeah.
Bob would have to consider carefully, though, whether he had that money up front. Okay, so Bob knows that it would be better if he could pay it up front, $658.50, but sometimes you have to look at your financial circumstances, and even though you know that you're being paid this, you have to pay this extra money, you sometimes have to choose monthly because you don't have that amount of money straight up. You might need to earn the money. What's your simple solution, Ali?
Every month you put away $58.75 into your bank account, and at the end of the year you will have $705.
And you'll be ready for the next year.
$58.50 to live and keep.
Yep.
40%.
Okay, so that requires some budgeting and planning. That would be an awesome idea. Okay, so if you would plan ahead and put the money ahead in your bank account so it's ready to pay for the next year, it's going to save you some money. Okay, so if you're going to be sensible like Ollie and do that, then you're going to save yourself money in the long run.
Save $3 a
Okay, so it depends. No, we save 46. Yeah, are we all good? So even though we know this is the best way to pay yearly, we do have to consider our financial situation. All right, let's look at our second example. Okay, so this second example, we know the basic premium. Our basic premium is going to be $1,487. Okay, shh, quiet. We know the basic premium for this other company is going to be $1,487. We're going to look at two situations. Okay, the first situation is, give me a name.
Rachel.
Basil? Okay, so Basil is a very safe driver and he has put no claims in for the last 3 years. So Basil is offered a 10% no claim bonus. What is his premium? Okay, how do we do this question? Okay, so we know the basic premium is $1,487. Basil is being offered a 10% no claim bonus. So he's put no claims in for the last 3 years. So the company says we'll give you 10% off. Okay? How do we work that out? 10 over 100 times 1,487. What does that give me? 148.70. So that's going to be his discount. So what will Basil end up paying? So Basil's premium will equal 1,487. We need to subtract that off. $38.30. Does that make sense? Okay, we're going to look at a second person who comes to the same company. The basic premium is still $1,487, but this time, what was the other name you gave me? Rachel, was it? Okay, so Rachel has a very old car. Okay, so she's charged a surcharge of 5%. Okay, so Rachel, because she has a really old car, they're going to charge her 5% more than other people. They just think this is a bit of a risk on the road, and they charge 5% more for this old car. So what do I do for this question? How do I start? 5 on 100. Times, now remember the basic premium is still $1,487. What does that give us? $74 and what was it? 35 cents. Okay, so the $74.35, what am I going to do with that now? We're going to add it on because it's an extra cost that she has to pay. So the 1487. Okay, so this is Rachel's. She's going to pay 1487 plus 74.35. What does that give us? Sorry, Tim?
1561.35.
And so you can see that because she has an extra charge, her premium is going to be a lot more than Basil, who got the discount for having such a good driving record. Now, of course, in real life, you've got all sorts of things going on. You're going to have excesses for this, and you're going to have surcharges for this to calculate your actual answer. All right, your turn to do some questions. So I'm going to press stop for me.